Welcome, everyone. This is James Colburn with Real Life Fridays, Windermere Homes and Estates. Almost 500 real estate agents in the wonderful, sunny, beautiful Southern California area, including Palm Springs all the way down to San Diego, and 11 offices in between those areas. Pretty much God's country, the Riviera of California. And today I have a special guest with me, and it's John and Melissa Heil. We're waiting for Melissa to jump on, but I wanted you all to know that we have John right now, and John is a loan officer with C2 Financial. He's got an incredible background for just decades, basically, in this space, as well as he and his daughter have a kind of a father-daughter team. It's great because his daughter calls him John, and it's very business related, but I know that they're a very close family as well. Guess where John is today? John is in Graceland. He's actually sitting at Graceland, Elvis's home, right? He drove all the way to Elvis's home for this episode just so that it could be an intriguing thing, right? So, right, John? Welcome, John.
That's exactly what it is.
Welcome, John Heil, to the main stage. And of course, when Melissa jumps on, April, just let me know. And John, tell us a little bit about you. How did you show up on this scene? But I want to go way back. We got to know about the John that no one knows, right? I want to know about, the spelling bees, everything. Tell us.
Well, I grew up in Orange County and went to Foothill High School, and then ended up moving to San Diego to go to San Diego State University, joining the greatest fraternity in the world, Tau Kappa Epsilon, whom Elvis Presley happens to be a member of.
Hey, John.
Yes.
I need to start your video real quick, because if we're going to be looking at your name for an hour, it's going to be brutal.
I'm trying to figure out my video, and I'm having an issue of figuring out where it is.
Oh, okay. You just tap the screen and it'll probably pop up.
No, it's not.
Okay. Is there any way we can do it, April, on our end? Probably not.
Let me try something really quickly. Okay, I just gave you a nudge, John, so you should see a notification that pops up. There we go.
John, don't touch anything. You had it. John, did you have it? Is he here?
You had it, he said.
He just left. He's just now coming back in.
All right, here he comes, guys. Thank you so much. It's been one of those weeks, technically speaking. But we're going to get this together. The last thing we want to do is stare at John Heil's name and not John, especially when he's in Graceland. But see, Melissa, this stuff happens every week, right?
There he is. He's back.
All right. Is he back in the game?
Yeah, he's with us.
All right. He's with John Heil.
There I am.
There you are. Welcome, John Heil, to the main stage. Thanks so much for joining us. Tell us a little bit about your background.
All right. Sorry about that. I inadvertently hit leave meeting instead of got it.
Okay.
So let me start over. Growing up in Orange County, moved to San Diego to go to San Diego State. Incidentally, as a little side note, I joined Tau Kappa Epsilon fraternity, of which Elvis Presley is a member. So that's why we came to see him. A frauder in the best words. At that time, I met my wife Michelle, as we always joke, drunk in a bar in Mexico. But from the day we met, we've been together ever since. Once graduated, I started work as a financial advisor at E.F. Hutton up in Carlsbad. Greatest thing to happen, they're the first person to offer me a job, and I've been in Carlsbad ever since. I worked several of the wirehouses, and in 2001, I decided to get my real estate license, as I felt real estate and real estate financing was a major part of the financial planning process. We looked at half of a people's assets instead of the whole holistic way of doing it. In 2000, after the crash of 2009, we continued doing loans as well as doing financial planning, which we still do today. then in 2012, I got my master's degree in finance, and I also got my real estate broker's license. About that time, Melissa was beginning college, and I don't know if she's made it on or not yet, but she ended up going to San Diego State and then graduating from USD as a lawyer. About 2 years ago, I've been with C2 about 6 or 7 years now. But 2 years ago, we decided to affiliate with, or not affiliate, partner with Windermere to be the loan officer's preferred choice for Windermere. I think one of the reasons we picked is we have everything local, and we provide more than the average loan officer does, because we will provide tax advice and financial planning help, and should you buy a rental, should you not buy a rental, which we think is important in the overall financial planning and process of buying a home. After all, we don't want to go through another 2008 again.
No, we don't.
So,
John, I love it. No, Melissa has not joined us yet, unless if she is on. I know that there's one user that's just numbers, not a name.
That's Ken.
All right, sounds good. But
Sierra, you might try and call my office and see if Melissa can get help, because she's at the office.
Here
She just joined. Yep.
Okay, so Melissa's going to be joining. Melissa's on now. And Melissa, can you hear us? Can you see us? I'd love to get a little background on you. I want to hear about, like, attorney becomes loan officer, right? I want to go there. I want everyone to understand how that happens. Although, in my opinion, it was a better move. But I want to also hear about the child advocacy that you're involved in. Some of the heartbreak, though, of realizing, what side of people's lives you were in, right? And how that was not going to be the most exciting career for you is what you realized. So, Melissa Heil, we just found out your dad's at Graceland today, and and love to know more about you.
All right. So yes, I went to law school on a child advocacy scholarship. So what I originally had intended to do was, work with kids, IEP plans, kind of getting them, keep them out of special ed if they can be in regular schools, that kind of stuff. I get into law school and I start doing the child advocacy. And it was very shocking to know this goes on in San Diego, but for the most part, it was, abused children and just terrible family issues. And it was just one of those things that I was not able to not take home. Still struggle with that in my job today, but I couldn't take that home with me every day, and I couldn't see it every day.
Right.
And, I tried a couple of different areas, trust and estates, those types of things. But with law, the unfortunate part is you're never really involved in a great part of someone's life. So even if you win them a case, they were still, or they were still sued. That's my favorite thing. I love being involved in great parts of people's lives, parts that, still just similar to law, it's stressful. People don't know a lot about loans and finance and the terms, but, I do, and I'm here to help them. And I can make it so this experience goes from, a very worrisome, stressful, they don't really know what's going on, to a very smooth process. They feel comfortable. And at the end of the day, they're stoked on both the home that they purchased and the loan that they got.
Right. Awesome. Well, and then, you and your dad have been working with each other for how long now?
Oh, geez. Coming up on 6 years.
6 years. And then it's interesting that you're the oldest of three, right?
Yes.
And there's a doctor, a veterinarian, right?
Yes.
And then a loan officer, and then obviously your dad.
Yes.
And so interesting. We just found out that a fraternity brother of your dad's is Elvis Presley. That's huge, right?
What?
So, by the way, John, did you rush with him, or?
He's muted. He doesn't know he's muted.
He's chatting away, huh?
Yeah. See if I don't know. I can't unmute him.
All right. Sounds good. Well, we'll nudge him there. So
John,
anyway,
unmute yourself.
I love when she calls him John. Yeah, John, just keep yourself unmuted.
Yeah,
There
I
you
tried to.
go.
It said the host muted.
Yeah.
All right. Yeah, sounds good. Okay, John, did you rush? Did you rush with Elvis?
No, but I did haze him.
Okay, awesome. Nice. All right. So guys, we've got a good group of people here on both Facebook Live and another 24 people on Zoom. And I just want them to understand a day in the life of a loan officer given today's market climate. Things are different. There's a competitive edge. Obviously, working with C2 Financial if you're a Windermere Homes and Estates agent. And I'd love for you guys to unpack that for us.
Right.
Melissa, why don't you go ahead and get started?
Okay. All right. So day in the life of the loan officer. Again, another thing I love about my job is no 2 days are alike. And you could wake up and think, you're going to have a smooth day, a couple closings, and suddenly some, wrench gets thrown in your wheelhouse. But I don't mind that.
We'll mute you and then you'll unmute, okay?
Yeah, it was kind of loud in the background there, huh? Yeah. So, typically, we are working on a day-to-day basis in regards to files and what to expect. We are really kind of having to adapt and work as we go. It just depends on, the market, like you said, especially last year when we had a lot of those refinances coming in and less purchases coming in. It was, so busy, and we had a lot of clients coming in. But I'm really happy to see this purchase business picking up, where purchases, as far as loans go, can be a little more difficult on a lot of different levels. They are, I find, more fun. So while the challenge is there, yes, it is a very big challenge sometimes getting people approved to purchase. I really love being involved in that. Like telling someone, we're going to make it work. Don't worry. We're going to get you in this house in 30 days or 21 days or whatever it may be. Being able to provide someone assurance. Yes, you can remove your loan contingencies. Don't worry. You are 100% okay.
Yeah.
That's a nice thing to be able to say to people. And so what we do as far as our process goes when it comes to pre-approvals is, I think John had a great way to describe it. He said, we take a holistic approach. What that means is that we are not just, a loan mill. We are really working with your clients to get to know them, just like a real estate agent does. Similar to getting to know your client and finding the right house for them. It kind of works like that on our end, but finding the right loan for them.
Right.
So people are buyers, I guess. Refinances is a little different situation. Buyers really appreciate when you're not just, another client, another name, another person being pushed through that they're getting financing through. We like to talk to them about how long are you going to be in this house? What are you going to rent this house? Are you going to buy a new house? All these different things that come into play in terms of determining interest rates and determining, their down payment, all these factors that make a big difference in the long run. And if we don't speak with the clients and we don't get an idea of what their life is like in their future or what they hope their future to be like, we might be a great loan, great interest rate, but it's not the best one for them. With John having 35 years of financial planning experience, especially right now, I don't know, on the real estate end, but I have been seeing a large amount of first-time home buyers coming into the market. I don't know if it's just, they've come out COVID and they've been saving money and now they're ready to go, but a lot of first-time home buyers, and a lot of times those clients are maybe taking 401k loans, or they're unsure of how to take money out of a brokerage account, or, do I take a gift from my parents? Do I do this? Do I do this? How much should I put down? John is able to give them both the information on how to do it, how to take a 401k loan, what that looks like, and to really give them some great advice and some guidance in terms of what is the best, I guess, asset source to use for the down payment. Do I need to put 10% down? Can I put 5% down, or should I put 20? So we have this kind of great dynamic where he's got this huge, long experience with financial planning. He's seen everything under the sun, every market. This market hasn't really been a big surprise to him, to be honest with you. I haven't seen him shocked yet. But with that being said, I come in and I also have, this legal background. And with loans, the way it works, it's all guidelines. It's all written guidelines. Half the time, if I put them up on the screen, nobody would understand anything that they were saying. And so I'm able to interpret that and kind of find those exceptions. So if someone's working a second job, or, there's all of the exceptions, and there's all reading the guidelines. And if you're able to read it, understand it, and explain it to an underwriter, you're going to you're going to be a lot more successful at getting people, using income, with debts and liabilities. So we kind of take that 1-2 punch of, hey, we can give you the financial guidance, but we can also make sure that, you're going to get approved. We're going to find a way. We're going to find a will. We don't have loans fall out. So we get our purchases closed. We get them closed in time, even in today's market with, the slower underwriting. But, we prep files. We get all of your borrowers prepped. We talk to them. We get to know them ahead of time. And so just like you guys do when it's time to purchase, that's kind of the end of your job as far as that specific transaction. That's how it should be for us too. Submitting that file should pretty much be, the end of our really hands-on time with that client. It should be prepped, it should be ready. There should be no question when we submit that file is going to close.
So guys, the powerful part of C2 Financial in our relationship with a handful of really amazing loan officers is we have the ability to underwrite with full pre-approval, right? So they've already gone through all of the automated underwriting by the time that letter is sent, which means that, it's a done deal. You can really with confidence tell a listing agent, it's a done deal, right? This thing has gone through all automated underwriting. It's not just one of these fakey fake letters that, sometimes you see where it's disclaimers all over the place about it really not being an approval. But maybe you guys can touch on that. John, you'll have to unmute, but maybe no one there.
I think I did.
Okay.
So the automated underwriting system is what the lenders use. So when you are in underwriting and, they're processing your files, that's the same exact system they run. Right now, just because the market's so competitive, and I do think, agents are becoming more familiar with what automated underwriting is. We do not even issue pre-approvals without first running automated underwriting. We want to be absolutely sure that we give your clients a pre-approval that they can 100% rely on, not have to come back and say, oh, I'm sorry, you can't purchase that high, or you need to put more down. We've already run it. I would never tell someone to waive loan contingencies because that's a liability on my end. But in reality, I never worry about removing them because I already know this is approved, this is eligible. I've ran it 15 times.
So your confidence is so high that you wouldn't even worry about waiving a financing contingency.
Not even with a self-employed borrower.
That's almost always. Every so often, buyers will tell us something that turns out to not be completely. I'm not going to say the truth. That's wrong. They're just mistaken. Yeah. So particularly on self-employed buyers or borrowers, we kind of joke. We're saying with self-employed, people will kind of brag on how much money they make, kind of like people's golf handicaps. But in reality, after their deductions and depreciations, et cetera, the net number they're using is actually a little bit less. But that's one of the reasons we like to get as much information we can from the buyer as quickly as we can. Because no one, the buyer's agent, the seller's agent, the buyer, the seller, wants a deal to fall apart because of the financing from something we didn't know.
Right.
Now, it does happen at times, but we want to know as much as we possibly can. Right. So because of that, we like getting tax returns, although we don't always use tax returns. Right. The W-2s, what their income is. And recently with the guidelines changing all the time.
So much, yeah. So frequently.
It looks like they're going to change again with the new FHFA director with a Supreme Court decision that just came out, that we actually think we might see a loosening of guidelines. Yeah. So because of that, we need to be, updated all the time on how to do it, how to be creative, how to make sure that, the income that we think is there is actually there. So go ahead.
We had Henry out as well as Rick to a couple of our meetings this week with C2 Financial. And Henry was mentioning just the power of that jumbo, because anymore these days, jumbo is kind of standard, right? And so, and then the rates are so amazingly low on jumbo. So maybe you could share that and how that is really helping you guys both get the business, but also create some real raving fans with your clients. And
let me jump in on that, Melissa. Is Jumbos, we probably have 10 to 15 different jumbo lenders we use the most. Anything from, non-QM kind of crazy bank statement loans all the way to 40-year adjustable with interest only, which you'd be surprised that higher income people and higher net worth people use interest only quite a bit. One of the reasons is they feel their money can be better utilized maybe in their business than paying off a mortgage. So, we're seeing rates. Melissa and I just quoted one that we're looking at a potential $4 million purchase with a $3 million loan. The adjustable rates were about 2.625, and the 30-year fix was 3.125. Yeah. And that's cheap money. That's very cheap money. So because we have all the different types, bank statement loans, rental, just using the rent of a place, we have a lot of different ways to get this done.
And we're all in one kind of lender package. So that's, again, it just goes back to getting to know the client. They don't have to use a 30-year fix if they don't want to. We want to make sure that they are aware of all of their options and present them with all their choices. They don't have to go use a hard money or a specialty lender just to get, a loan that's kind of more fitted to where they are at in their life and where they're going to be. The jumbo loans, those, what John was talking about, the interest only, those aren't any different for us to process through. We have a very solid system, very clear guidelines across the board with our lenders. And we have great relationships with them. And so, we don't have that issue of surprises when you're going through underwriting. I think everybody's probably had a deal where something pops up and it can just completely stall the process, and it might just be, like John said, a borrower didn't tell us something, or it could be, a lender has put a hard stop. We don't run into those problems because of the fact that we've gotten to know the client. We've made sure that that loan is appropriate for them, both from a qualifying perspective and from their financial needs.
All right. Well, with a huge group of agents with Windermere Homes and Estates and all the areas we serve, I would love for you guys to just tell everyone why real estate agents in our company should work with you. What's the benefit to work with you other than another loan officer out there?
Let me jump in on that, because I actually have a lot of different answers from that. Number one is we have 100 different lenders that we can use. And because of that, we will shop the loan to get the best loan for your client. Now, one of the things we have found is your next deal, where is that coming from? And after 35 years, I have found that the most likely place for the next deal is from a previous client.
Yes.
And so that's one of the things we try and do as a loan officer. Too many of them, and I've seen in this business, are very transactional. They do one deal and they never talk to the client again. I think repeat business for most loan officers is well under 10%.
Yeah.
Ours is 25 to 50%.
Right.
Now, if we do a good job for your buyer and they like us, not only are they going to like us, they're going to like the real estate agents.
Right.
And so if they step up and buy another house, a bigger house, they're going to use that real estate agent. If they want to buy a rental, they're going to go back to that real estate agent. So we keep in touch afterwards. I mean, one of the things we use, and everyone should be on this if they're not, is HomeBot, in which clients are getting a analysis of their home and the area and the value every single month. Now that is coming from the real estate agent. We help with setting that up. The only way we get contacted on that is if they ask about a loan. So the referral is coming right back to the real estate agent. Now I know that's something that Windermere has had some specials on for the real estate agents. And I truly believe if you're not on HomeBot, you're making a mistake, because it is really, really good on what it is. And it's sure a heck of a lot better than having your clients go look at Zillow to see what their house is worth. Because let's face it, Zillow is in competition with all of us now. And there's no reason we want our clients to be looking at our competition when they can be looking at us.
Yeah. Melissa,
Yeah,
how would you answer that question? I mean, where's your kind of competitive edge from a C2 financial standpoint with any of the loan officers that agents work with within our company?
Yeah, so I think one of our biggest competitive edges, especially working with Windermere, is we really provide your clients a team of people. It's all right there. They're not having to go and shop around for loans. We've got 100 lenders. They can shop around for loans with us, the same person. They don't have to reach out to 15 different people. We're making this process super easy for them. They know we're working as a team. We're not two separate companies. We're not on two different sides. We work together with our Windermere agents as a team, and we make the whole process not just a loan, a purchase, an escrow. It's a whole entire experience that we kind of coordinate with all of the agents and make it so the client feels like everything's in one place. We work, and we're constantly developing new ways to do this, but we're always trying to find ways to tie the agents in on status or on, what clients are telling us. Flowify is a great example. We can tie an agent to someone's loan application, and hey, if your client hasn't uploaded docs and you're wondering why they're not pre-approved, it's going to let you know. You don't even have to call and ask. So all of those things that we're working really as a team. So I don't have to call and, be constantly bugging the borrower. Someone could say, hey, maybe I'll reach out. They saw this great home they asked me about. They haven't uploaded docs. Oh, let me reach out. We'll talk about this house, and I'll tell them, hey, we really need to get pre-approved. Make sure you upload those docs. And it goes vice versa on things. We talk to clients a lot about, a lot of times hesitations, especially right now with purchasing over purchase price and is the market going to tank? All of those things, we're on your side. John always has a great quote, don't lose your dream home over $5,000. So we are good, about assuring clients to help you to make sure your deals are getting under escrow. And clients feel good about it too. They don't feel pushed into it. I think that, having that team in that single place, the one-stop shop, is one of the biggest advantages we have. You can shop around loans just by using a single loan officer. You have all of your people who you need to purchase a home right there. You're not working with 15 different companies.
One other thing on Flowify is once we have the pre-approval set up, we can actually set up Flowify so the real estate agent can go in and print their own pre-approval letter. So if you don't, let's say your pre-approval is at 800,000 but they're approved up to 900, the real estate agent can go out there and say, our purchase is 850, our loan is 600, and we're going to print out a new letter.
So we can get in there, revise it to the proper number. Can we put it in an address for the property?
I believe you can. We can. So
you can.
I'm going to have Jim jump in. Jim's got an interesting kind of background with C2 Financial and obviously 17 years of real estate experience and his success with using C2. Jim, could you share with all of our agents and with
yeah, I'd be more than happy to. Thanks, John and Melissa and Stan. I don't know if Stan's on this, probably not, but I think Stan's on vacation finally. Well deserved. So I was with Berkshire Hathaway actually for 10 years and exclusively have always used in-house, lenders because you guys are there and available, and why wouldn't we, and the ability to have a relationship with a top lender in your own office is pretty amazing. So as soon as Stan's group came on board over there in Rancho Bernardo, the past, few years I've used them exclusively, and the results have really been phenomenal. The thing I like most is how you communicate, not just with, us if we're the listing agent or buyer's agent, but the other agent, obviously, in helping us get, in some cases, our offer even accepted. But giving the other side the comfort level that you've done your research and you really do know, that these people are fully approved and ready to go. We've had appraisals even been waived at times because you've deemed the buyer strong enough, and that's just been incredibly helpful and beneficial. And just the communication has been awesome. The tools you just mentioned, the what's the one you just said, John? That I'm sorry.
Homebot.
Homebot, yeah. I mean, I've started it a little bit, but I can see I really should probably continue to do it and be on top of it. And it's like, why not? So there's a lot of good tools. I like the communication tool that you send frequent updates with little videos on the status of the loan process and where they're at. And so my buyers, even first-time home buyers, have seemed to be extremely well, or just comfortable and confident that they're in good hands with people that know what they're doing. So I like your process. I like your people. I love the results. I mean, I've had 3 recent closings where we removed the loan and appraisal contingency in 14 days, inspections in 10, and closed in 21 days. All 3 of them right on time. And could have closed them early. We closed one in 18 days, actually. We did 3 days early because the seller wanted to. I'm sorry?
Yeah, we're actually waiting on a loan to close next week that is sitting, done, cleared to close. So it's happening better and better as everyone's come along and as the years moved on.
How much? What's the least amount of time you can do on a closing?
Oh, geez.
Well, if it's an all cash offer, we can do it in 2 or 3 days.
Well, like Jim was talking about,
18 days.
he was talking about the appraisal waivers that we can get. Those come back to the automated underwriting. That's where we find those, and that's another great benefit of running it at pre-approval. You say, we're going to put an offer in on this house. Can you run automated underwriting for me? You can waive your appraisal contingencies. You don't have to tell them it's because you have a waiver, but it makes your offer look way stronger.
Absolutely.
And so with like a truly, pre-approved and clean file, if we get it uploaded, I mean, in all the best case scenario with appraisal waiver, you could close a loan in 2 weeks. 21 days isn't a problem.
Yeah. I tell other agents, I've never seen anything like it. It's the best results I've seen from a lender in 17 years. And it's the honest truth. So there's your best. That's your,
Well, Jim, I owe you a $2 Starbucks card for that one. I'm joking.
That's
absolutely true. It's easy.
I really appreciate that.
Our processors will appreciate hearing that as well.
Yes.
Yeah. I mean, and I've talked to a few of them, and they go out of their way to ensure that, the people they're working with are aware of why they did what they did and getting it done, and they follow up and get stuff done. So it's pretty impressive, to be candid.
Yeah. Well, appreciate that, Jim. Thank you. And, our moderators, Sierra and April, have a couple other questions out there. So Sierra, April, what do you have?
I guess I'll start real quick. So we have a question. Are rates the same for refis?
No.
Right now, they're not, because there is a Fannie Mae fee of 50 basis points, which is 0.5% of cost, not interest rate, but cost for the adverse market fee. And it's what it was about a year ago at this time when everybody was going into forbearance, et cetera. Fannie and Freddie were afraid we were going to have, another foreclosure boom. So right now, I would say refis are about 1/8 higher. Now, there's been comments recently because of the Supreme Court decision with the new FHFA director that adverse fee may go away. So we're actually kind of looking for that over the next month or so, which would make refinances and purchases on par with each other.
Wow. Okay. Thanks for that education. I did not know that they threw that little adverse fee in there, probably to mitigate the damage of everything going down.
Correct.
April, what else do you have, or Sierra?
Sierra, do you have any questions?
You can do a little segue if you want. I know you all mentioned something about financial planning and how getting a loan go hand in hand. Do you mind telling our agents either just some tips that they tell that their clients about those two things?
Yeah, I'll jump in on that. I've been a financial planner since 1987. Now, one thing I do have to do, because and James, you're all familiar with this, is compliance. So anything I say on financial planning is not an offer to buy or sell any security. And First Allied Securities is not affiliated with Windermere or C2 in any way. So now that I've kept my rear end clean, We totally believe financial planning is part of the home buying process, and particularly investment people. And Melissa went back to on what loan you choose. For sake of argument, let's say we're looking at a first-time home buyer and they have very good credit, but they want to keep some money in their back pocket for, maybe they just had a baby. Maybe they have small children that they're going to go to childcare. So we look at that when someone's going in to buy a home. And if it's more advantageous to pay PMI of $50 a month or some small number and keep that money in savings or to be used for childcare, to have a baby, to get married. I mean, we're running into a lot of people who are in the process of getting married, buying homes. So that overall process is a big thing. Melissa brought up earlier about, do you borrow money from your 401k? Well, it's a possibility you do. But don't forget, if you borrow money from your 401k, you have to pay it back every single month. Now, you're paying it back to yourself. So a lot of times it's a better loan than a second or even having a higher mortgage. Can I remove money from my IRA? Well, you can take $10,000 out of your IRA for a home purchase. Yes, it's taxable, but no, it's not penalized. And then one thing we do with all of our loan people, we set them up on our retirement and wealth management site, which allows them to continue to not only to monitor all their accounts, but we find it's a great way for people to begin saving for the next house.
Yeah.
So particularly for first-time home buyers, yeah, maybe you stretch to buy your first home, but what happens if it's 2 years later and now we have extra money? Well, if I can then show this previous buyer how to save or how to get to that next house, not only does it help me on getting the next loan, but it helps our real estate agents getting the next real estate transaction. We think rentals are a hugely important part of an overall financial planning portfolio. We've all seen how markets have crashed, including the real estate market, including the stock market. So from a person's overall financial planning point of view, number one thing is diversity. We want to diversify our assets. So it works both directions for us. So it's just one extra service that we provide to our clients to make them feel comfortable in their purchase. I had a real estate agent that I actually went to college with, who happens to be a teak, and told us that line. He said, our job is to make our clients feel comfortable. Now, it's the real estate agents to make it feel comfortable with their purchase, mine with their loan, and all of us together with their overall financial life. We want them to be comfortable in what they're doing.
Yeah, and I think it kind of too just goes back to like that, getting to know your clients and the holistic approach. If we wouldn't talk to our clients, we might not know that they're, hoping to buy another house in 2 years and turn this into a rental. So what does that mean? They bought down the interest rate. They don't recoup the cost. We can advise them. If we know the client and we kind of know what their plan is, we can let you guys know too, like, hey, 2 years, they want to turn this into a rental. They're already thinking about it. So, we know so much about our clients at the end of the day, but it turns into a really great thing because keeping that relationship going after you close the deal, like John said, and those repeat business and referrals, those are way more likely to occur if someone really, truly trusts you and knows that, you got to know them, not because you wanted to get the transaction, but because you wanted to get them the best loan. You wanted to make sure that what they were doing was truly the best financially suited, because some people be like, this is my forever home. I'm going to stay here forever.
Let me jump in there on something else. I don't know if Melissa's still going, but she's frozen on mine. One of the things that we're seeing a lot, and I'm sure all of you are, is you're getting beat out by cash-only buyers. Well, one of the things planning allows us to do is to do a mortgage after the cash is purchased. So we'll come in afterwards and mortgage the property, but you can get in on all cash, and that way you're assured you can get the house and maybe get an offer accepted that you wouldn't otherwise do.
Yeah. Anything else out there, April or Sierra? Any other thoughts, questions for these two? I would just appreciate all the education.
Yeah, I have one more from Ellen and Jack. What are rates today?
And let me jump in on that, because one thing I did want to cover a little bit is economics and what we think is going to happen here over the next 6 to 12 months. Rates are down to about 2 3/4 today on a conventional 30-year mortgage. Maybe as low as 2.625, but we're pushing it a little bit. The jobs report came out today with 850,000 new jobs created. However, the unemployment rate went up to 5.9%. So actually rates came down a little bit today, little unusual. We actually think rates are going to stay flat, maybe even down a little bit over the next 6 months. Economically speaking, it looks like the big inflation bump we got for the last 2 months is going to be transitory. Part of it is because people are having a hard time getting people to work, and it stifles the economy a little bit. So it keeps rates a little bit lower. However, the other thing I think this is going to happen is it's going to elongate the recovery. So yes, it's a V-shaped recovery in the economy, but it's a little less steep than it otherwise would have been. So because of that, we think the economy growing over a period of years is going to continue for a longer period of time. Home builders still have not caught up, and there's still not enough homes being built for the number of people wanting to buy. One interesting economic on that, Melissa is 32. Her high school class, and I think the one before her was the largest graduating class in US history. Now, by that I mean the age across the nation. For the next 10 years, every class was larger than the last. So what's happening is her generation, 25 to 35, maybe up to 40, is coming into the home buying part of their life, particularly first-time home buyers. Well, it's a huge demographic change of people wanting to buy homes. So I don't think we're going to catch up on the number of units we have out there anytime soon. So even if rates go up some from a better economy, we're going to have prices be stable. I certainly don't see any declines in prices.
All right. Well, the $6 million question is, do you think we're in a bubble? I get this question probably daily, and I'd love to hear from your perspective, John and Melissa, on the whole bubble idea. I mean, obviously prices of homes are just incredibly high and growing. I know David Goodman had one go for $257,000 more than full price, closed, yesterday. I mean, obviously crazy times in the real estate industry, and it all has us a little wary, just because, what goes up goes down, right? But what goes down goes up. So I'd love for you to share your thoughts on bubble.
Well, yeah, let me jump in there. No, I don't think we're in a bubble. The main reason is because the amount of debt we have out there. Every bubble has popped because of debt. And if we look back to 07, 08, and people remember the movie The Big Short, where the exotic dancer owned 5 or 6 different houses. Well, that person had so much debt that if anything bad happened, it was going to make that person have to liquidate everything. Currently, household debt service, monthly debt service, is the lowest it's been as a percentage since 1980. So what causes a bubble to happen is that people are forced to start selling. So that's when the bubble drops and there's no one else to buy because of there's demographics. Everyone's bought. Once everyone's in, there's no one left to buy. So we don't see that. Now, could I see prices flattening? Of course. We see that we stair step our way up. We get a big move up, which we just got. San Diego's, I think, was the biggest in the nation, or in the top 3. So we could see some stabilization. But we certainly don't see it declining at all, particularly in San Diego County. Let me give you one other quick anecdotal story that goes along with that for the people in the Del Mar and Carlsbad area. We recently went to a graduation party at the Park Hyatt Aviara. And I was sitting at the bar talking to a person who is a corporate office locator. So he's down here looking in Carlsbad to see if this technology company, as he was telling me, might move an office down here. And he was singing the praises of Carlsbad and North County. Finally, I asked him, what is that technology company? Google. So we're already seeing it. I think we're doing 3 loans for Apple employees moving down from the Bay Area right now. Google is happening. Viasat is huge. Qualcomm is growing. 5G is happening. We're seeing technology and biotechnology dominate San Diego, which are all high prices and or high incomes, which support very good real estate.
Google moved into the Seattle area, and this was a huge opportunity for real estate agents. So to hear that, can't believe he shared the company actually, but to hear that is.
I've seen it on the news too.
It was pretty funny because he didn't want to do it. He just told me, yeah, I work for a technology company.
Yeah.
I think too, it's like with the bubble, you guys, like, that the borrowers I see who are most concerned about that are people around my age. People who, when that bubble was going on, we are old enough to know it was going on, 18, 19, 20. It affected us. We're coming out of college. We knew what that was like. We're seeing what's going on now. And those are the people that are most concerned that it's going to happen again. We don't really have like as a general group, the financial understanding of the markets, maybe that someone who, has a little more wisdom than we do. And so, we kind of lived while other people lived through that and they understood it. We lived from it in more of a outside perspective looking in. So we just kind of really saw the worst of it on the news and all that. And, we don't know how to anticipate when it's going to happen again or what it looks like. We didn't own homes at that time, but we know a lot of people were majorly affected by it. And so having, both John and myself here to advise people and say, like, this isn't a bubble. Here's why it's not. Here's what's different now. Here's what distinguishes what we're going through now from what we went through in 2008. And just giving people that information is really what settles them down most of the time. Giving people the knowledge is power, right? And so if they feel that they understand and they have the power to make the right decision, they're going to feel a lot more comfortable purchasing a home.
And to be frank, we don't get a lot of 5% down loans. Most of our people are afraid to be under 10% down. And so when we start getting a lot of people barely getting to be in, then I'll start getting worried about the markets.
I got 2 questions left. The first one is, what would you tell your 20-year-old self, John, if you could?
Well, number one is, and this is going to fall on deaf ears for most 20-year-olds, is save some money. We tell 20-year-olds to, don't spend all their money. Let's face it, they do.
Oh, yeah.
But if they're working, and I'm going to go to financial planning on this, is number one, put money in their 401k all the time. Begin savings and make it automatic. So that's number one. Number two, I guess I would tell myself, don't drink so much beer.
Jim just said, and don't touch it.
Yeah. Yes. Well, let me give you another anecdotal story. Another friend of mine who is a few years younger than me, who's an advisor, he used to tell his clients, maximize out your 401k, maximize out. He told me the story the other day. He's got $3 million in his 401k now because he did what he told everybody to do.
So Melissa, different perspective, like 13 years ago, what would you tell your 13 years ago, 20-year-old self?
I mean, I honestly completely agree with John. Don't spend all of your money, right? So if we look back to just the things that we spent money on, but when you're ready to buy a house, that's a hard time to start saving because it might be 2 years and that sucks. But if you're just saving a little bit, whatever you can, and a 401k is great because it's not a bank account, it's not a savings account you can just take the money out of. You got to, take some serious actions in order to withdraw funds from that. But it's also money available for a down payment if you're a first-time home buyer. If you want to buy a home, you can still withdraw those funds. So it gives you kind of like the hands-off, I'm not going to touch this type of account, but it's not also limiting your access to the funds when you want to make a huge purchase. So it's like save whatever you can. If I would have saved $100 a month, 15 years ago, it's a lot of money, but we don't think about that at the time.
Yes, okay. No Tesla.
Yeah, someone says, so no Tesla? So, hey,
right.
Okay, so let's do some Marty McFly Back to the Future, and let's talk to yourself 20 years ahead. Now, you don't know where you're at 20 years from now. You don't know where you're at financially. You don't know anything, but you probably could share some advice. And it might not be loan advice, guys. It might not be money advice, right? I think this, the idea of telling yourself something in the future that you already know that you probably are going to forget for the next 20 years if you don't keep on it. What is that thing you would tell yourself 20 years ahead?
You go first, Melissa.
I had to tell myself, one thing that I always try to tell myself every day is to treat people in a way that in 20 years, I'm going to look back and, irrespective of how they treated me or what happened, I'm going to feel comfortable. I'm not going to wake up in the middle of the night with anxiety. I'm going to know that I treated that person, irrespective of my feelings at the time, in a way that was respectful to them and was kind and, maybe sometimes just neutral. But, it's always one of those terrible feelings when you look back and you burnt a bridge. I think one of the sayings that people say is like, what makes people most sad on their deathbeds is, knowing all the friends that they burned bridges for, the things, the people that they were unkind to. So I think that that's something that's very hard to remember in our day-to-day life, especially, with Instagram and, gossip and the media and all that. But if we can really just try to focus on, being respectful and being kind to other people, that's something that in 20 years, 50 years, 100 years, we're going to look back and be grateful for ourselves for doing.
John.
Well, let me give you a little bit. I'm going to be 60 this year. And so we look at that a lot. At 80, I'll probably forget that I said this. But as I said earlier on, I'm at Graceland right now. And so I think over the next 20 years, if people have a question of whether to go or not go, go. We've had a lot with the pandemic over the last year. I had a client who 57 died, had retired from Boeing, had 2 years. At 57, he died from COVID. So he didn't get to do all those things he wanted to do. Yeah. So go do those things. And it's okay to do them. That's the biggest thing I would say. 20 years from now, I hope to have lots of grandchildren and be moving around still and be healthy. Number 2, I would tell you, exercise. Because at 80 years old, you don't want to be using a cane if you don't have to, or make it hard to get around, because I tell you to go do those things, but if every step hurts, you won't do it. So exercise every day so you can do those things.
Oh, man, I love that. I love that. Thank you so much. On behalf of Windermere Homes and Estates, Rich Johnson, and all of our 500 agents doing $39 million in commission every year, selling $1.8 billion in houses, or almost 2,600 transactions a year. We look forward to working with you guys and with C2 Financial as a whole, with all of our loan officers at all the branches. And just thank you for just kind of shedding light on all this. And so thank you so much. And everyone, have an awesome 4th of July weekend. Say hi to Elvis for us. And thanks for joining the show. Hey, real quick, in 2 weeks, we've got Obi Jacoby, the owner and president of Windermere Real Estate. So stay tuned, and I'll talk to you soon.